I would now like to proceed and announce certain additional measures. As you would be aware, we announced several measures as a part of the MPC statement, and a number of these measures have very far-reaching consequences, and they make a lot of impact on our overall financial inclusion, on our financial, on deepening of credit, on the spread of UPI, and on other aspects of the economy. So we have a few measures. I request your continued patience. The first announcement relates to review of regulatory framework for financial benchmark administrators. It has been decided to revise the extant regulations issued in June 2019 and put in place a comprehensive risk-based framework for administration of financial benchmarks. This will cover all benchmarks related to foreign exchange, interest rates, money markets, and government securities. The revised directions will provide greater assurance about the accuracy and integrity of the financial benchmarks. The next announcement relates to review of regulatory framework for infrastructure debt fund NBFCs, that is IDF NBFCs. At present, infrastructure debt funds provide refinancing facilities for lenders in the infrastructure sector. The extant regulatory framework for IDFs has been revised. The key changes in the revised framework are: 1. Withdrawal of the requirement to have a sponsor for the IDFs. 2. Allowing IDFs to finance toll operate transfer, that is TOT projects, as direct lenders. 3. Permitting IDFs to raise funds through ECBs. And 4. Making tripartite agreements optional for PPP projects. These changes are expected to further augment the capacity for infrastructure financing in the country. The next announcement relates to greater transparency in interest rate reset of equated monthly installments based floating rate loans. Now, let me just read it again. I think that was too long. The next announcement relates to bringing in greater transparency in interest rate reset of EMI installment-based floating interest loans. It is proposed to put in place a transparent framework for reset of interest rates on floating interest loans. The framework will require regulated entities to, again, there are various components. It will require the regulated entities to, number 1, clearly communicate with borrowers for resetting the tenor and or the EMI. Number 2, provide options for switching to fixed rate loans or foreclosure of loans. 3, disclose various charges incidental to the exercise of the options. And 4, ensure proper communication of key information to the borrowers. These measures will further strengthen consumer protection. The next announcement relates to consolidation and harmonization of instructions for supervisory data submission. The Reserve Bank has from time to time issued several guidelines on submission of supervisory returns by the supervised entities. It has been decided to consolidate and harmonize such guidelines into a single master direction to reduce compliance burden and to promote greater ease of doing business for supervised entities. And the next announcement, actually there are 3 announcements within this announcement, and it relates to UPI. And basically the announcement